Focus on the rupee as well in just a bit. We have someone joining us to comment. I mean, last 3 days, the pattern has been clear. The market, the rupee makes newer lows and then intraday it kind of pulls back a little bit. And I think what is today also something similar has happened. Abhishek Goenka is with us, founder and CEO at IFA Global. Abhishek, good to have you with us here. Good morning. So, what are you seeing on the screen? I mean, if you're watching what's happening, and what should we expect from here, Abhishek?
Hi. So, of course, we all know that the rupee is weakening because we don't have any clarity from the trade deal. And I think this point of time, that is the main thing which is driving the rupee. I don't think that only because of a poor trade deficit numbers which has come recently because of gold imports, this is happening. I think also Putin is going to visit India. And I think there could be some trade deal announcement post that. And I think everybody is watching on India's stance on importing.
Yeah. Abhishek, we know the reasons, but my question was more about what you're seeing on the screen now and whether people will be emboldened to short rupee from here with the assumption that the RBI is not going to defend it beyond a point. Anandya Banerjee is also with us, and we also have Dheeraj Nim, who's with ANZ Research. Anandya, of course, is with Kotak. Anandya, welcome back. Come in with a quick comment. My question is more immediate. With 90 gone, is 90 something which, you're past 90 now. So what from here? You think this continued depreciation will be the case from here on, or will the RBI step in a more aggressive way, which they've not done so far?
Right. Very good morning. Thank you for having me. Yes, 90 is a very important psychologically. As I said yesterday, what happens is a lot of these option traders, especially in the offshore, they watch these large handles, 80, 90. So today is, right now is the day when the RBI is supposed to come in aggressively. Because if it closes above or it's trying to sustain above 90, we could see a more speculative move. Because see, when speculators get in, they become emboldened. It creates a fundamental of its own. It's very then hard to put a macro perspective to it. Right now, it's pure speculative move, which is happening.
Absolutely, Anindya. In fact, I remember you said exactly the same, that if 90 goes, then we need to watch for 91 perhaps, if the speculators are not checked. And that's what we need to watch, whether the RBI comes in and stops excessive speculation. Usually when interventions happen, and this has been a bit of a free fall on the currency, 5% in a matter of weeks, you'd expect it at what time of the day, Anindya?
Generally, they come in before the fix, and the fix is around the noon. So that's when they come in. But I think with 90 gone now and it's trying to push higher, we could see the intervention soon. A heavy one. It has to be quite a heavy one.
Anandya, can I ask you, now at this rate, to push the rupee back, I mean, is there any, how much do you need to spend to move to push the currency pair back? I mean, any broad number calculation? I mean, any way to think about this question?
Generally, in the past, when RBI had tried to push it down by a rupee or more down, so let's say if they want to push it down to 89, then generally the interventions has been as high as $2 to $3 billion. But they have the option of using both the spot as well as the forward. They can even use the NDS. But the spot intervention is always the most effective because it creates a bigger panic with the speculators.
But does the cost keep going up? I mean, if you let it move like this? I mean,
yes, because more speculators will join the party.
Yeah.
And then it creates a self-fulfilling trend. So that's why the RBI tends to break such things. Because if you look at the RBI data that itself has shown that how their intervention or rather the gross activity has gone down, the buy and sell over the last 6-7 months. But this is a time when they have to intervene and try to check the volatility.
So, by the way, the first couple of trades were interesting because after hitting 90, the rupee, I think, straight away went to 90.14. That's been the low. And then it has pulled back a bit from there. And we need to see how it happens. And as Anandya is saying, the intervention might happen earlier, much before noon this time around. Dheeraj Nim is also with us. Dheeraj, what would your immediate expectations be? Would you expect heavy intervention? Of what nature, what magnitude? And give us a sense of, if you're looking at current positions, give us a sense of the rupee shorts and the dollar longs in the system as well.
So look, I think, of course, 90 is an important psychological level, and once it's broken, I agree that there could be some speculative interest that could come into the market. This is an RBI that, one, does not like speculation very much, and second, has been preventing an overshooting of the exchange rate despite the adjustments it's allowed. So I think that pattern is going to remain. They will not allow a runaway depreciation from the current level, so to speak, over a few sessions. But I do believe that over at least the next few months, until we have a clarity on trade deal, the rupee should remain on a modest depreciation path. Now, in terms of, how the flows are happening, look, we are seeing at the current levels because expectations have moved in a one-sided manner. There's a significant amount of importer hedging interest, and rightly so, because the expectations are going for a weaker rupee in the months to come. So I would imagine that, at the moment, from an economic configuration perspective, a weaker rupee is an adjustment that we require for the economy. And I don't want to overplay the script as in it's not really a bad thing that's happening for the exchange rate, but something good perhaps for the economy. So I think the RBI will control it. But of course, the recent action shows that they're open to further rupee weakness.
So adjusting to fundamentals in that sense, but where will that now level be, in your opinion? Not where it'll finally settle, but what you think is the fair level given, the current account deficit, low capital inflows, etc.
Look, we have rupee going up to 91.5 by the end of 2026. The risk is that it could be there sooner, but our view is also juxtaposed to our dollar view, which is that we expect the dollar would weaken by about 4 to 5% over 2026. So you can imagine the latitude along which we're expecting the rupee to depreciate.
Anandya, same question to you.
Yeah, see, currently the Indian rupee appears quite undervalued at this point in time. But again, when there is a speculative move, the market can stretch further. Because with the macroeconomic stability and the low inflation, yes, there is scope for the rupee to depreciate and stimulate the economy from the external sector without hurting consumption. But I think a point will come when somebody taking a 12 to 18-month view on the Indian assets as well as the Indian rupee will find it quite compelling to go long on the rupee. It might sound very crazy at this point in time to say that, but I think the rupee is getting quite undervalued.
Okay, just very quick last 30 seconds to Dheeraj, to you. I mean, that point on exporters benefiting is very well taken, but the risks of a very rapid move to beyond 90, what would the prime risk be? I mean, obviously, from a flows perspective, it's not been a great year. And then we're looking at a current account deficit situation as well.
Right. So I think from an economic data perspective, it's important to watch how growth evolves from here on. So any incremental data on growth which seems to suggest that we are losing ground could be problematic. We are also heading into the budget. Look, we have been fiscally comfortable the last few years. So any news flow that could perhaps indicate fiscal stress, and I think that's the risk that we are running with currently, could also be a problem for flows further. Current account deficit, yes, I mean, it's on the course to widen, but the broader expectation is that it will remain contained and manageable, so to speak. And if there's any news flow that suggests that that's not the case, that could also be a problem. So look, at this moment, market would be watching all economic data, all news flows very, very closely to understand what pace of rupee depreciation can the RBI tolerate. But that said, they have enough firepower to restrain the moves.
Got it. Gentlemen, thanks very much, all of you, Dheeraj, Anandya and Abhishek, for joining us. Let's get the 9-10 calls out of the way. So